Hello and welcome to the channel. It's time for our standard heading, this month's top 4 stocks in the stock market. What do I want in February? As is customary, I'll start by discussing what I'm seeing on the market. My primary investment hypothesis. So, from least risky to most risky, let's go through the stocks. Before I go any further, please keep in mind that this is not investment advice. It's just my view, and I'm sharing it with you as if we were at a bar, drinking whatever we want. So the thesis is that the market has been extremely volatile for a long time, and the beginning of the year was, to put it mildly, extremely green and positive. Many companies recovered and skyrocketed, and many stocks started to recover. Many of the market's fundamental problems, however, remain. There is the largest war in Europe this millennium, and there are a slew of consequences ranging from energy to a variety of risks. I'm not just referring to energy, I'm also referring to fertilizers, specifically potash and nitrogen fertilizers. Nitrogen is thought to be slightly more effective in general. Russia is being pushed out of these markets, and other countries are filling the void gradually. In any case, I anticipate a fertilizer shortage next year, which will have a negative impact on several growth areas. In this segment, I'm only betting on fertilizers. Prior to that, I bought a number of food manufacturers, including Tyson Food and others. Nonetheless, I want to bet on the same supply chain, and I'll start with these companies. I've already started buying chemicals, but in general, I'll have more fertilizer in this category. So, here are my top 4 February stocks. The first company I see and intend to purchase this month is CF Industries, ticker CF. This company has good value because, for starters, it is not in a growth phase, will not grow as quickly, and all of these companies are very calm. They are extremely dependable in comparison to Palantir or DocuSign. Companies are growing slowly, they have a lot of value, but now I expect them to grow a lot due to the capture of a new market and future growth due to fertilizer cost increases. Because it appears to me that there is insufficient fertilizer for everyone. CF Industries is a major player in this market, which has been growing for quite some time. Earnings per share are $18 and the price-to-earnings ratio is 4.77. Super low cost. Less expensive than the S&P 500. Why? Because, once again, all analysts are noticing this, and I, too, believe that a reversal is imminent. The current share price is $86. Analysts, on the other hand, believe that $110 is a reasonable price. That is a 40% increase that you and I can anticipate for next year. For a value company that pays dividends, has a strong capital inflow, and maintains its stability during a crisis or recession. This looks really interesting to me. The second company I'm considering is Mosaic, which operates in a similar market. Their offerings differ slightly, some offer potash fertilizers, while others offer nitrogen fertilizers. I'll say it again, nitrogen appears to be slightly superior to potash. However, I buy both. I'm not sure which will be at a disadvantage, so I decided not to guess. I like both companies, so I bought them both. Mosaic is now $50. Their EPS is 11, their P/E is 5, and their forward P/E is 4.38. In other words, Mosaic is a slightly more profitable company in terms of parameters. However, due to the difference in product range, CF has a little more potential. Analysts place a $57.33 price on Mosaic. However, they do not, in my opinion, lay out all of the possibilities. The company also pays dividends. This is a one more value stock. It has the potential to be a formidable company. Despite a 60% or 70% increase over the previous local minimum, the third company I'm considering buying this month is still worthwhile. Yes, that is Tesla, the one and only. I continue to believe that $250 is a reasonable target price for next year. And the current price of $190 still appeals to me. I'm not going to buy any more Tesla this month because I already have a large number of shares I bought too aggressively during its decline. It used to account for nearly a quarter of my portfolio, if not more. In general, I've decided that it's adequate for the time being. This is true not only for cars, but also for the sale of insurance, electricity storage, batteries, and logistics. Tesla is everything. The company's price is now $194, representing a 20 to 25% increase. This is still significantly better than the S&P 500. However, if Tesla keeps all of her promises to us this year, such as launching a Cybertruck, the price will rise even further. Analysts, on the other hand, have already stopped believing that Tesla has reached its target price and will remain in the flat. As a result, she is already in third place. There is no longer the risk-reward relationship that existed when it dropped to $110. Meta is the fourth company. The story here is quite interesting. First, the United States is gradually beginning to ban and restrict TikTok, and Meta is the beneficiary. If TikTok is banned, all users will migrate to Instagram and Facebook, resulting in Meta. The company is also launching WhatsApp monetization, which has enormous profit potential. In addition, $40 billion in buybacks. In short, the company now has a lot of room for growth. Although $40 billion appears to be a large sum, it represents less than 10% of the company's current capitalization. It's a lot. The company's EPS is $8.97, and the forward P/E is 28. This is a reasonable estimate for a growing company. It's not as interesting as it was a month ago, but it's still worth 180 to 190 with the possibility of buybacks, WhatsApp monetization, and so on. There is still something you can do to earn extra money. Analysts have set a target price of $208 for the stock. That is, while a 10% improvement isn't much, I believe she has more potential. When we see the next reports about some of their changes to WhatsApp, when they start making money from it, remember, there are hundreds of millions of people who use it on a regular basis. I believe this will have a positive impact on their reporting, and the buyback of market shares will result in a reduction of at least 8% in market equity turnover. Subscribe to the channel because the next video about the top 12 dividend stocks in the US market that can perform well in 2023 is on its way.